Alright, we're going to go back and look at this comprehensive problem example. We're going to look at the financial statements. You need to go in and make sure that you have a copy of the adjusted trial balance to be able to look at, because what you're looking at on the screen is not going to be clear. It's very blurry. But if you look at your adjusted trial balance, and you can follow along with the things that I am going to be showing you and telling you. When we do these financial statements, the things that you need to look at is right above the capital account, right under where you see the mortgage payable, please draw a line because those are items that are going to be found on the balance sheet. All right, so you're going to want to separate these out so that you know exactly what you're looking at. The other thing that you want to take a look at is if I draw a line underneath this drawing amount, then I'm looking at the stuff in between is the statement of owner's equity information, and then the underneath that we're going to find your income statement information. So when we get ready to look and create these different statements, you want to set it up like this, and then we can go in to create the statements. Now the first statement that we have to create is the income statement. So in looking at the income statement, what we're going to have is you have to do the header. So I'll have the title, which is Wind in Your Sails. I then will have the statement name, which is Income Statement. And then I would have for the month ended, because we're only looking at 1 month for this particular company, June 30th. 2000 XX, because we're not real sure what year we're in. That is going to be the header for the income statement. I then will come in and I will list out my revenue accounts. So I'm going to start with revenue. I'm then going to indent over and actually have the accounts that we have been using. So income from services is the first revenue account that you're going to look at. The next one is the concession income. I will start all the way to the right with my columns. I have $23,867. Notice I do have a dollar sign there. Concession income is going to be at $178. I need to add my revenue items together to get total revenue. So when I finish this, I'm going to have total revenue of $24,045. Then I'm going to come down and list my expenses. Now the expenses that I have here are going to be sailboat rental, I will have wage expense, and I can get these right off of that adjusted trial balance. So remember, you should have your adjusted trial balance out as we're working on this. Advertising expense, utility expense, interest expense, insurance expense, your depreciation. And we have 3 different depreciation, so you're going to list all 3 of those out there. And then you're going to have your miscellaneous expense. And then after that is where you would have your total expense. Now when I look at my expenses, I'm actually going to come in and I'm going to create a new column with those amounts in them. So I'm going to have $700, $9,683, 890, $1,259, $1,351, 1,000, $715, 26 or 260, I'm sorry, 900 and 144. I will add all of those numbers up, and then I will come over and the total expense, I'm not going to put the total here, I'm going to actually move it over, and it's going to be at the 16,902. Then I would underline that. So what I'm going to do is I'm going to go to the next slide, and I'm kind of going to break it up to where I have the total revenue is figured at the 24,000 what 045, and then the total expenses would have been at 16,902. So after that underline on the last page, this is kind of what we're looking at. I would have net income. The net income would have a dollar sign. I would take the total revenue minus the total expenses, and I get 7,143, and it would be double underline. Now I couldn't fit this all on one slide, which is why I've broken it down into the two slides. What you want to do is you want to go in on the example problem. I actually have the way that this is supposed to look. Make sure that you have your underlines in the correct place. Make sure you start a column with the dollar signs. Make sure when you finish you double underline and you have that dollar sign there also. The next statement is the statement of owner's equity. So in this statement we have the header, wind in your sails. It is the statement of owner's equity, and it is going to also be for the month ended. And that's June 30th. So we're going to start this with the beginning capital balance. And the beginning capital balance, which was on June 1st for this particular case, was actually 0 because this company just started. So we're going all the way to the right, and we would have a column that starts with 0. Notice I have a dollar sign there. We would then come in and add. The things that we add are capital contributions. So this is when the owner is putting money into the business, and this is the things that have happened during the month of June. And the owner actually put $95,000 into this company. So I would have that $95,000. Notice I have a dollar sign to start that particular column. I then am going to add to that the net income. Now, this net income is coming directly from the income statement. So that 7143 number that we have right here, that is going to move over, and that is what you're going to see right here is the 7143. I'm going to put an underline there because I need to add those two amounts together. Once I add those two amounts together, I come up with $102,143. I would add the beginning balance to these amounts, and I have $102,143. I then will take and do a less. Now less is going to be the drawing account, and I get that directly off that adjusted trial balance, and that is at $4,300. If I had a net loss, it would go here. I don't have a net loss, so I don't have to worry about that. I then can total those two amounts, and I get the $4,300, and then I get the ending capital balance as of June the 30th. And that is going to be the $102,143 less, which means minus the $4,300, which will give me $97,843. And again, $ and double underline. The things that I want to make sure that you are seeing here. We have $ to start. We have a $ to finish. Other pieces of information that you will see. We have underlines. That means a mathematical computation. Underline, mathematical. We're adding those things. Here, we're adding the things above that line. Here, we're doing subtraction. And then we get to the double underline, and remember, that means the end. We're done with this particular statement. This balance that you see right here will move forward to our balance sheet. All right. So I want to go back and look at the information. We have already completed the income statement. So that's done. We have done the statement of owner's equity. So we can check both of those statements off. Now we are at the balance sheet. Now the balance sheet is coming directly from this information. So we're going to take these numbers here and move those over as far as the balance sheet is concerned. For this one, I am going to look at classifying this balance sheet so that you can look at some of what it would look like if I had classified the balance sheet. So in this one, we have the title, Wind in Your Sales. We are going to look at a classified balance sheet. Now remember, a balance sheet is only for one day in time. So it's going to be just for June 30th. That is the only time period that this particular balance sheet is going to be looking at. When we start and we look at a classified balance sheet, we start with our assets. And the first thing we have are current assets. Now remember, current assets are things that are cash or will be turned into cash within 1 year. The current assets that we have here, we have cash, and it is valued at $22,478 is what's on our adjusted trial balance. We have accounts receivable, which is at $28. And we're going to have our prepaid insurance, which is going to be at $11,000. We then will get a total for our current assets. And the total for current assets, let's look at that real quick. It's going to be $33,506. So when I get to this, I have this total current assets, and it was valued at what, $33,506. So now I'm going to finish the statement out. I'm just going to put that up there as so we can kind of see where we were at with the whole statement. The next one that we're looking at are these fixed assets, also known as plant, property, and equipment, or plant assets. What we have here, we start out and we're going to have land. And I'm going to come in one column, and we have land valued at $37,000. Then we come to our pool structures. Now with pool structures, they have the accumulated depreciation with them. I need to have the pool structure, but then I need to do a less the accumulated depreciation for pool structures. So when I do this, I need to move over another area, and so I have $140,000, and the depreciation for this one is $715. So I would take the 140 less the 715, and that's going to give me $139,285. Then I come down to the fan systems, and that comes right underneath it. So I would have fan system. The fan system is valued at $14,045 less the accumulated depreciation for the fan system, which is at $260. And that's going to be a total of $13,785. And then I have the sailboats. The sailboats were valued at $38,790 less the accumulated depreciation for the sailboats, and that was at $900, and that's going to give me a balance of $37,890. Now, for fixed assets, I do need a total, so I'll have total fixed assets, and the total amount for the fixed assets, and what I'll have here is the $37,000 plus the $139,285 plus the $13,785 plus the $37,890, which is going to give me a total for fixed assets at this $227,960. Those will be all the assets that I have. So then I will get to my total assets. And my total assets, I'm going to actually take the total current assets, add it to my total fixed assets. I will have a dollar sign there, and I have 261. And let me add this real quick. 33506, 227,960. So I have 261,466. And again, this is going to be a double underline situation. And so that's what I'm looking at when I get to the total assets using this classified balance sheet. So that's the first part. Because we know with these statements, we are looking at the asset side, then we also have the liabilities plus the owner's equity side. Well, we've done the asset side, so now it's time to look at liabilities and owner's equity. So when looking at the liabilities and owner's equity, we have liabilities and owner's equity. The first one we have here are the liabilities, and we will start with the current liabilities. Now remember, these are things that are going to be paid within the year. So in this case, we will have the accounts payable amount, and that is valued at $7,210. We would have the wages payable, and that is at 810. And so this gives us our total current liabilities. And the total current liability here that we have, if I add those two numbers together, I will have $8,020. Then I'm going to look at and have my long-term liabilities. And this one, my long-term liabilities would be my mortgage payable. I've indented over, and I'm at 155,603. I will total that out and get the total long-term liability amount, and that's going to be the 155,603. And then from there I get my total liabilities. So when I add those two numbers together, what I'm going to be looking at is $163,623. The other thing that I have to add in here is that owner's equity, or that capital, and the capital is going to be at $97,843. So when I total that up, I will be at $261,466. Again, I need to double underline that because that is the total there, and that would be the total liabilities and owner's equity that I would have there. That 261.44 is actually going to equal the 466 for the assets, and my assets do equal my liabilities plus owner's equity. And so this would be how I would do the classified balance sheet. So this is really taking that adjusted trial balance and preparing statements using the adjusted trial balance. You will need to do this on your comprehensive problem when you actually work your project. So just make sure that you go through it, that you understand what's being required as far as that project is concerned.